The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 6th terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie. You got it. Perseverance Rhodes. And I believe we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the good in everything out there. So the gift in every set of circumstance. So I'm just trying to figure out what that gift in this set of circumstance of this nasty bug that I've got. I suppose it means more time laying on my back in bed, but that is hard to do. That is hard to do. You know, at a young age, my dad taught me, hey, if you're sick, just go take a shower and get up. Play hard is basically what he said. So, look, I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call. Now it's not too soon, 877-927-6648. Of course, internationally, 727-445-1044. So I'm all showered up. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 18 points. She's trading out at 19,235. S&P is up 4 at 2209. NASDAQ Composite is up 4. That's interesting. It looks like, don't tell me this is what's going to happen. My system seems to have not getting any data flow through here. Now, that would really be a bummer, to pick myself up out of bed and get ready for this and then have the system basically go down. Oh, my goodness. Well, I think that is really just recent. So the data we're going to go with is pretty close to accurate. And then during the breakout there, I'll try to figure out what might be going on out here. Bummer. Gold is back about $7, trading right around 11.69. Silver is down about 9 cents. Light sweet crude up about $1, trading around 50.75. I have to say trading around because I have not seen a active data feed out here. So let me try to do this. We'll find out. I did not get to a couple of requests yesterday, just being under the weather, just simply overlooked it. One of them was to go take a look at CERN, C-E-R-N is the ticker symbol. Let me see if this populates. It probably will not. Yeah, it will not. So that means that's a real bummer. It's going to be interesting. When I say life happens for you, now we're going to see how to persevere through this without some live data. All right, so the easy thing that we're going to do here as I switch gears, what we do know, as I saw posted inside the den, talking about the IWM. Jay said, yeah, pretty impressive with how that thing came off the bottom. I can't actually type that in here because we're not going to see anything. But here's what I can do. Here's what's impressive, and he's absolutely right. But here's what's not impressive. It's at least something that I'm keeping my eye on out here. Now, when I say keeping my eye on, here is, and I don't show this too often. The reason I don't show it too often is because it's basically, it doesn't occur too often is the reason. Now, the top portion of my chart that you are looking at is the IWM. So I'm going to use the ETF that most of you have access to versus just go ahead and put the Russell 2000, the futures contract up here. The bottom portion of this chart is the advanced decline line for the Russell 2000. Now, point of interest out here, I suppose, would be I'd ask the question, how many symbols do you think are inside of the Russell 2000? Of course, I've got to actually answer that question for you. Give me a moment here. And really what I'm saying is how many symbols are inside the IWM out here? And the question, well, let me put it to you like this. Maybe not all symbols trade, and that's probably a more accurate way to take a look at it. For example, yesterday, on December the 5th, there were 1,924 issues that traded. A couple days prior to that, 1,926. So when I take a look at this advanced decline information, because you can go back even further than that when there was less than 1,900 issues that traded. For example, back in 2015, December, there were only 1,887 or so issues. So the way that I'm calculating the advanced decline line is making an adjustment, kind of like a ratio type adjustment out there. And that is, so don't pay attention to the number of 17.67 on the right-hand side of the chart. I'm taking a look at advancing less declining issues and dividing that by the total issues traded. In other words, in order to give us a more accurate way to be able to see this. Now, it is not very often within inside of this indice that we see a divergence. When I mean a divergence, so we don't really have it just yet, but it is one to pay attention to out here, especially today. With it getting back up to its highs, or maybe even trading above the highs. I don't know at this stage of the game where it's at. It's pretty close there. And what I mean by that is oftentimes when you see a divergence inside the advanced decline data, such as we did back here in August of 2015, back to September of 2015, and this is for a trade. This is the length of time, that it's just for a trade out here inside the inside what we're looking at. You can see that the IWM was able to go ahead and make a lower low. But when all of a sudden at the end of the day, the advanced decline line was not. It was just really making a test of the recent bottom back on August, right around the August 25th, 26th timeframe out there. Here's the reason that I bring it up with it being so strong is because I'm getting some signals out here that are saying really not so fast. Now, if you take a look at the advanced decline line, no divergence yet. I won't really know till the end of the day. And you know how much I hate to say that end of the day stuff out there. But nonetheless, at the end of the trading session, if in fact the Russell 2000 has taken out its highs, but the advanced decline line has not, that alone is not a reversal signal. That is a, hey, buyer beware type of signal. It can be resolved the very next day if it has some good market breadth. But right now, I'm starting to see inklings of problems inside of, the leader on the way up on the Russell 2000 out here. So we're going to pay attention to that. I just wanted you to be aware of that as well. Are there other signals that why was Stevie looking there? Well, because I'm seeing these other signals. For example, New York Stock Exchange having one heck of a day. Can I say heck on the air out here? I believe I can. You know what I was really going to say. I mean, this thing is, new all-time 52-week highs, not all the way back to its highs, but it also has a bit of a concerning pattern right now. Its advanced decline oscillator, very bottom of the panel, still has not taken out its highs. So therein lies a divergent pattern. We have the same issue going on inside of the Dow. We took a look at this yesterday, you and I. We can see that price has been moving higher, doing less relative energy out there, but yet its advanced decline line, our advanced decline oscillator line, that's the difference between two moving averages, 19 and 39. That has not made a higher high. Again, folks, those by themselves are not signals. They're indicators. They're tools that say, something just isn't right. That can all be resolved with good market breadth, but it's not there. And so this is a warning sign. Because I can see something going on inside the New York Stock Exchange, something going on inside the Dow, something going on inside the Russell 2000. And look, December's going to finish higher. You might say, how do I know that? December is one of the best. You already know this. You don't need me to tell you that, right? I mean, if you take a look at this, December is one of the stronger months of the year out here. Hey, let's go ahead and play the patterns. I'm going to see if I can connect these batteries and get a data feed here, make it easier for Robert and I to take a look at the UNG. We'll be right back, please.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I'd tell you what the Dow was up in the S&P and the NASDAQ composite, but I can't. My data feed, I don't know what's going on here. Just one more thing to deal with. But let's go out to Robert anyways in Buffalo. Robert, thanks for calling. Thanks for holding. I think you wanted to take a look at United Health. Is that correct?
Yes, Steve, I did. And thank you. I hope you're feeling better, Steve.
Well, thanks. I appreciate that. Now, a bit of qualification here. My data feed is basically down, but I'm going to give you the best that I can with regard.
Can I tell you what happened?
With regard to United Health. So yeah. So tell me what you're looking at, and go ahead.
I bought UNH at 129. I got stopped out yesterday at 156.70.
Okay.
And I think it had gone up to 161. I don't know exactly when to put a stop in, but I gave it a good $4, and I still got stopped out. So is it okay to go back in, or should I just stand pat?
Well, let's try to answer that question the best that I can with the data that I have out here. Now, what I don't know, it looks like I have yesterday's data, but I can't even be sure of that. Do you know approximately where it's trading at right now?
Yeah, it's about 157.50.
Okay,
right,
so then it looks like I've certainly got yesterday's data. Now on my chart, what it did yesterday was it came back and tested a level of support, and that happens to be a line that's on my chart. I call it Stevie's red line. What that really stands for, Robert, that is a level that I'm trying to explode this chart up here if I can. There we go. That's the wrong one. That's the wrong button. Give me a second here to see if I can actually get over to I know I need to change. Where I'm at. So give me 1 second to do that. It was coming down to a level of support, which is what again is referred to as the oscillator unchanged line. Are you watching this on Tiger TV by any chance?
No, I'm the blind fella, Steve. I don't see
okay. Okay. So, so thanks. That's right. I'm your eyes. You're my ears out here. Okay.
That's right, Steve.
And right now today, I could use you to be my throat. But But as we're taking a look at it, it was coming down to a level where I take a look at whether a price oscillator is rising or falling. And what I use is a 19 and a 39-day exponential moving average. And what the oscillator does is it calculates the difference between the two of those. And so normal pullbacks inside a market typically come back and they test that line. Now, I go ahead and I put that line on my chart. It's a red line, and I put it on my chart so that I can in an instant know if the price oscillator is falling or rising. It's very bullish when a price oscillator is rising, meaning that it is trading above Stevie's red line. And it's easier for me to see that as it relates to price as opposed to a bottom panel on my screen out here. So yesterday's pullback, so you're saying you're not sure where to put stop sometimes. One way to take a look at it is as you did. You came up with a stop, so I congratulate you on that. $4 may or may not have been the average true range of the stock over a 10-day period of time. Sometimes that's a good level, or maybe outside of that, because that's just really the average daily noise inside of an equity. If I had active data, I would, I could give you a better signal. But what I can say is that price came back and it tested a level of support out here. And that is positive. As long as it trades above, again, this number is going to change a little bit as I get data, but basically above 157.20, all that occurred yesterday was it was coming back to test a level of support. Now, I can also see where it gapped up a bit, Robert, on November 30th. Which is a sign of strength. So yesterday was coming back into that level. I don't know volume-wise whether it was coming back with lighter volume or heavier volume, but if it was coming back with lighter volume, then you have two, in essence, tests of support out there with regard to yesterday's action. Oh, wait a minute, I do have some data that is back on my screen. How about that? You must be my good luck charm out here.
I'm your lucky charm, right?
Yeah, I like it. Okay, so now let's go take a look at some live data out here, and here's what I'm going to suggest you do, because you're not in the equity and you want to get back in. Wait to see. Go ahead and put a buy order in on this thing at 155 and some change out there. Anything above 155.01. That would be the bottom of its TAS daily profile low. That's also going to be this breakout area, which took place on November 29th. It had good volume, 5.8 million shares. And, your stop on this would need to be somewhere below 152.85. So, it becomes another, $4-ish type of a stop for you. That if this is going to continue to move higher, that's the area where this should trade back to and then continue moving higher out here. So that's what I would recommend to you today as of about 1:25 in the afternoon.
Oh, that's great. I appreciate that thing. Thank you very much.
Oh, my pleasure. And thanks for holding. Thanks for hanging on while we were trying to get a data feed out there. Have a great day, Robert. That was Robert in Buffalo. So, okay, this is good. So we're back to live data. So let me go back because there were a couple of issues. A couple of requests yesterday that I didn't get to. CERN was one of them. So let's go take a look at CERN. And the question was trying to come in to find a place to buy this equity. Now, it's trading at about $47. This thing has had quite a sell-up since a high that was formed out here just back in August when it was back in the $67 area. So it's had a pretty decent haircut out here. If we're going to take a look at, let me go to my other charting system real quick, CERN. Punch that in, see if there's anything that shows up. And there is. So there's one pattern here that shows up. It's not picking up today's data, but that's okay because we can go back and forth between charts. And we can see that price has been moving lower here recently and doing it with less relative energy. Now, we don't have a bullish reversal signal inside of this, and that's really what you need when you see that pattern that is in play out here. So it has a potential of a bottoming pattern that is out there. Now, let's go take a look at CERN and put this on a weekly chart out here and see what this is doing as far as a weekly. Let's first take a look at the potential of an A to B equals CD to the downside. We're going to go ahead and turn off the TAS market profiles. And the B point on this, or the most recent swing point that you and I are going to go measure, took place out here on the week of February 29th. Volume of 17 million shares out there. Ooh, taken out with 30 million shares the week of November 7th. And then last week was another, was 19 million shares. Nonetheless, moving below a swing point with volume. This says this has further to go to the downside. In fact, the A to B equals CD pattern that in essence has been activated here inside of CERN. It takes you to approximately 41.37. You're trading at 47.62, and that is only the one-to-one. I can easily make the case that this will move all the way back to the $34 level. That's the way that it looks right now, based on the volume patterns and a lack of really any type of support. This thing has broken. This thing has done everything. Excuse me, that you wouldn't want it to do. Right? CERN has broken through a trend line. If we go back into 2009, you can see that, no matter which trend line I use out here, this thing has broken through a trend line, so that's not good. So CERN looks like it is headed lower, and hope that helps you out today. The other next question was TRIP, T-R-I-P. So let's go take a trip with TRIP advisors out here. This, too, does not look very good. Trade out at 48.10. And last week, a couple weeks ago, this thing had some real volume to the downside. So we'll go take a look at TRIP, and then the rest of the markets. Anything else that you'd like to as well, just give us a call, 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 8, S&P is up 3. So back to the IWM chart. Just as an example out here, there are a few other instances where the advanced decline line was confirming a different signal. So back here in 2014, right around the October 16th timeframe, you saw the IWM moving lower. We saw the advanced decline oscillator, not the advanced decline line, the adjusted advanced decline line moving, making a higher low out there. Again, it's not often that we see an actual divergence occur out here. Here's another one back in the top in 2010. The market the IWM was moving higher, and we did not get a confirmation with that adjusted advanced decline line. And then, of course, back in 2007, as the IWM was making its all-time high, and that's no longer its all-time high. But back in 2007, you saw a declining advanced decline line out there. So we'll pay attention. This, like as I say, we're now basically back into the swing point from November 25th inside the Russell. And again, this alone is not the signal or the pattern that's going to get you, that's going to confirm anything. There's other patterns out there that would. One that's easy to confirm is, again, as I was referring to with Robert, is that oscillator on change line. And you can see right now with regard to the IWM and what it did here yesterday and today is it actually just simply tested and rejected that red line. Now, we know that the price oscillator is rising, and there is nothing more bullish than a rising price oscillator. So the IWM can resolve the issue below and continue to move on to higher highs. And, you know, it's an excellent tool. Otherwise, I wouldn't use it. But it's an excellent tool to really give you that confirming signal. Now, where are we in model way 2004? Here we go out here with regard to the 2007 top out here. You know, as soon as price got below, which was really the following day on July the 11th, we saw it just kind of hang out right around that area, July the 12th, and then finally just totally gave it up back on July 19th and the 20th out here. So that red line is an important line of confirming what the market wants to do next. And at this stage of the game, as we fast forward to where we're at today, the number's 132.84. You need to see it close back below that level. Plus, you'd want to see this divergence in order to give you a signal that, you know what, the IWM is ready to take a rest. And that is possible, what's going on here. We're seeing now, could be because of the rotation that we're seeing these patterns out here. Everything really, I say everything except for the NQ. And maybe the NASDAQ composite as an example, but we're seeing the market struggle, right? And so really it is all about the NQ. Here's the daily chart for the NQ, which today on the bounce earlier in the day, this morning, got up to about the 47.99 level. You'll see that's Stevie's red line. So the NASDAQ is really struggling here. Now, we know that we had a nice little TD9 setup. This was back on November 29th. Those often could be levels where you see the market either top or bottom. In this case here, it was a top. Price gets on the very next session below that oscillator on change line. And at this stage, price has just been bouncing into levels of support. Well, if you take a look at levels of support, levels of resistance inside the NQ, because it's good to know what is the struggling indice, or in this case here, equity futures contract doing? Well, what we can see by switching over to these intraday time frame charts here, the 30 is the panel on the left. Next to that is 60 minutes. Next to that is 90 minutes. Next to that is the 2-hour chart. And what we can see here coming together from the 60-minute, the 90-minute, the 120-minute out here, you can see the bottom of that box out there, which is 47.71. If you look at the 60-minute here, I'll go ahead and blow it up on my screen. You can see the point of control closer to the top of the box. Tells us in this price area here, it is sellers who have control. Well, sellers have had the control, and they've been able to get price down towards the bottom of 47.71. Have been able to bust through that level. Can't bust them down. Maybe it's going to try to bust them to the upside. We're not going to go ahead and make that call here just yet because, you know, it can't bust them to the upside until it gets above that daily oscillator on change line. Here's the 90-minute. You can see that price is right here towards, and again, same type of configuration, where really it is these sellers that are, in essence, in control of this box. On the 2-hour chart, a different story. That point of control is pretty much equidistant between the top and the bottom, so it's pretty much neutral, but 47.70 becomes the number to pay attention to. If we go ahead and we kick things to the upside, And what I meant by upside was higher time frames, 240, 300, daily and weekly. Those are the panels that you're looking at on our screen right now. We can see this 47.74 area on the 4-hour chart happens to be the point of control. So price is very comfortable in this area. If you're wondering why is the NQ just hanging out here, it has all types of profiles on all types of time frames that would suggest you'd either find support or you're comfortable with regard to where you're trading at. When we take a look at a 240-minute chart, doesn't mean it can't get to 47.63, which, by the way, would be a bullish pattern inside the 4-hour chart out there. And then if we go to the 5-hour energy drink chart, we can see the top of that box is at 47.67, which is where the NQ found support. You kind of see the message that we're taking a look at is if the market is going to, if those patterns that you and I have been looking at, which is some diverging patterns between advanced decline lines and what price is doing. And in the case of the Dow, the advanced decline oscillator reading being below zero out here, if all those patterns are going to mean anything, likely what we're going to see is the NQ will give us that first signal. And that first signal is that, okay, these levels of support where it's trading at have just simply failed. And price will go down to the next level. And here we'd start taking a look at where those next levels are. If we look at the weekly chart, here is where the problems really lay, whatever you want to say. And that is because the bottom of that weekly box, which we did see it close below last week, that says that it's really struggling out here, is at 47.63 area. So about 10, 11 points lower. If you get it closed, and it's a weekly chart, so really it's a weekly candle session out there. But nonetheless, with regard to all the other support that you and I just looked at on those multiple time frames, you know, this 47.60-ish to 47.71 is really a key level as to where price is trading at. Now, on the NQ, on the 30-minute chart out here, what we do know is that price moved higher, as we looked at yesterday, doing it with less relative energy. We had a market that just moved sideways up until this morning at about 10:30, where price went ahead and made a bit of a higher high. I didn't like that high-pitched sound out there. A higher high. Now, as it was doing that, gets to wave number 6 of 7 that we look at, but still doing it with less relative energy. That alone was a bearish reversal signal. So we know that this is significant resistance out here. It's getting above this 4,800 area. Didn't actually get up to 4,800, but we're using that as our line of demarcation, and now just continuing to trade sideways. Now, on a 30-minute basis, you've got a nice little hammer candle from a few hours ago, so that says that that bottom is muy importante. That's about the 47.67 level out here. You're trading again at 47.76 right now. So the NQ, you know, it's not looking really great out here. And look, if price moves to the upside, takes out the high from earlier this morning, all it's going to do is get to wave number 7, maybe doing that also with less relative energy. I don't know, won't know until we actually see what happens should that occur. So inside the NQ, price is pretty much at good support. We could have a real just simple, hey, the market's not going to do a whole heck of a lot today on December the 6th out here. If we look at the futures contracts, the equity futures out here, we look to the NQ. Again, here's now you're looking at both daily and weekly in the right-hand panel out here, so we can see that level of support, those levels of support. We do have brand new weekly profiles showed up in the ES and the Russell 2000. So the ES now has significant resistance at about 22.13. This is Steve Rhodes with not much of a voice. And we'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 8 points right now. And with regard to gold, with regard to the mining equities out there, still the same scenario, different day, same tune out here, and that is that the Japanese yen futures, what we're looking at, they're trading a little bit. Where are they trading at exactly? Pretty much right about here, 0.87745. This chart here has got 2 extra decimal points in it. But what we can see is that price has not been able to take out that red line. That is a significant level of resistance. Once cleared, that's a very positive, but it hasn't cleared it. It's why we are seeing gold doing what it's doing, which is that gold itself has not been able to break its own oscillator on change line. If we go take a look at gold out here, give me a moment. We'll go ahead and punch this up on the screen. I'm just going to put the continuous contract in hopes it would put, unfortunately, it didn't put the current price. Gold is trading out right now at 1170. This chart is showing it at 1176. We know that's not correct. But what we do know is that price still has not been able to take out that oscillator unchanged line, that red line. That has acted as resistance. So getting above that, closing above that, not getting above it, closing above it would be a bullish message. We don't have a bullish message just yet when it comes to Goldilocks. I don't see any requests, so let's go take a look at some individual stocks out here, moving to the upside and to the downside. Let's look at the upside out here. AutoZone, AZO, see what it is. Whoops, the heck did I do there? Let's go see what it is doing. I got a lot of clutter on this screen. Let's get rid of some of that clutter out here. Let's take a look at where this is trading at in relationship to its profiles, volume-wise, and so forth. So we can see that the level of support, in essence, was tested yesterday, which was approximated the weekly TAS market profile high, 769.95. Never got down to that exact level, got down to 781.01. Today bounced back up, really gapped up. It's not the traditional gap, like there's a gap of space out here, but here's where it closed yesterday, right around the 776 and change level, and today it opened at 787. So it showed a sign of strength out here. Oh, I know what I wanted to do. I didn't do that, right? It was CERN, and what was the other one? That Trip Advisor. We should have taken a look at Trip. We'll do that after. So what is AutoZone doing? We know AutoZone, because of this TAS daily profile's got significant resistance to 802.95. Doesn't mean it won't trade up there. Doesn't mean it can't pass it. If it's going to pass it, you're going to see it move up there into that area with more than 128,000 shares. That's the volume from the swing point from November 25th. That volume is not really a good gauge of volume, right, because it was during Thanksgiving. So you got to at least double it. Or something along those lines. But at this stage here, it looks like AutoZone, no reason for it to not go. Try to tag that area. Certainly the 802.95 is a level that is open. So it was Trip Advisors out here. And I'll say the same thing with regard to CERN. We looked at CERN. If we look at Trip Advisors, so the first thing that you're going to do, let's kind of walk backwards here. Backwards or forwards. So here with regard to CERN, or Trip, I should say, and this individual is looking for a buy. Now, I don't see a bottoming signal that's in place out here. That doesn't mean that it's going to send me a postcard and say, hey, Steve-O, bottoming signal is in. But in different things that we look at, different patterns that we look at, tests of swing points, seventh wave moves, moving lower in this case with less relative energy, those types of things. Excuse me, that's really nasty on my throat. Trying to get a piece of ice on that. Woo! What we can see, excuse me, is this, you got to give me a minute here. Now we're testing the, larynx there, how far it can actually stretch it. So it looks to me like you should at least see a bounce inside of a Trip. And that would take us up to about 51.40. And the reason I say that is because of the daily profile. Yeah. This is a struggle. and the reason is because that point of control is so close to the bottom of the box at 46.50. Really, it should be buyers that are in control of this price area, which is between 46.50 and 51.40. That alone is no reason to go ahead and enter this trade. Now, I think that this listener is trying to enter this trade as a long-term trade out here. And so I'd say, in order for you to do that, if we look at this, we pull this back, what we're going to see is a number of signs of weakness out here. Volume to the downside. That's what we had most recently on November the 9th. What you need to see is volume to the upside. You need to see this thing really try to break out here. And I just don't see it just yet. Just don't see it just yet. How smooth is that? You know, I'll put the daily chart. I do believe this may have been moving lower with less relative Trip, TRIP. Moving lower with less relative energy, you know, and it was. And price looks like it's trading just slightly above that oscillator and change line. And that's a positive. But other than a trade, if that's what you're looking for, I wouldn't go ahead and get into this and say this is the bottom of this equity. And the reason is that if you go take a look at, for example, weekly, let's put this on a monthly chart out here. And on a monthly time frame, you know, yeah, this is coming back and testing this swing point from July of 2012, but I just don't see it. You had some pretty good volume last month. I don't show a sign that was an exhaustion to the downside. There's no reason for this not to pull back to 43.12 and even get all the way back down to the IPO area of 24.57. So just be careful out here. Trade, I can see it. As far as an investment, now it could be a trade that turns into investment. I could just be wrong, but I'm just not seeing it here for you in a Trip or CERN. But keep your eye and continue to look for some type of sign of strength out there. I don't want that sign of strength to be you. I'd rather you just navigate behind that sign of strength. Signs of weakness, boy, Chipotle's taking on the chin today, down $31, down about 8%, with volume to the downside. So what Chipotle is doing out here, got some lines on here. Let's get rid of those lines and go actually take a look at what it is. So let's put our market profiles out here, see what they are doing. So all those levels of support have failed. So now we know we can get rid of those and take a look at, in fact, let's look at Chipotle on a longer-term basis out here. See where this thing is headed to. And unfortunate, right? It's stock at about the 7-something range, and now it's trading at 365. And the swing point out here was from October. Weekly chart we're looking at, that had 6 million shares. You're trading into it already, and it's only Tuesday with 4.5 million shares. So it says that price is going to go bust that out, or at least go test the low, which is 352.96. And if it busts that out, what it says is going to come all the way back here to October 2012, somewhere in the 238, 252 range. Looks like that is where Chipotle is headed to right now, trading at 365. Excuse me. To the downside also, we've got Teva Pharmaceutical Industry. That's down $29. That's about 4.5%. Oh, this is basically ugly. Unbelievable. Take a look at this equity. Must be because I don't know if it was reverse splits or not. I'll assume it was because of reverse splits inside this equity. But back in December 2015, it was all the way up in essence at a price of $1,035.78. I'm sure that's not what we're going to find out. But in essence, what we can say is ever since this stock, this is TEBVF. Is that it? Teva Pharmaceuticals. Everybody basically inside this equity is in a losing position. That's a nasty looking chart. Steve Rhodes with TFNN. I'll be right back. We'll get through that last 4-minute segment out there. Give us a call, folks, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 11 points. S&P's up 4. Let's go take a look at the March Treasury bond, 30-year Treasury note out here. Bond for Danny in Atlanta. Now, Danny, I don't know if you're long or short, what you're looking at out here. Here's what I can tell you the stock chart has told us. And this is 2 days ago. Again, for whatever reason, as you guys know during the show here, I ran into a data problem, which I'll figure out how to resolve. So I'm not getting today's data that's punching in here. But bonds are trading, they're trading just slightly below this 150.25 level, but still above the 149.92 area, which is Stevie's red line. So bonds have actually, a 30-year Treasury, I should say, price had been moving lower, doing less relative energy, right? We know that alone is not a buyable pattern. But when the cavalry shows up, which it did 2 days ago, formed a nice little piercing candle, closed above Stevie's red line. Yesterday was a test of Stevie's red line and a rejection. That means a test of support and rejection. What the 30-year Treasury bond is communicating to you and I is that it has formed a bottom. Now, whether or not it's going to totally take hold or not, I don't know. Is it a buyable bottom? Yeah, it is a buyable bottom. That's the pattern that is absolutely in play out here. Now, you'd have to have a relatively tight stop, which means a close underneath that red line would be a problem out here for you, and say, because there's nothing worse, nothing more bearish than a falling price oscillator below zero, and it's well below the zero level out here. If I put the and so that's what. And however, the big problem that you've got, Danny, or the big problem that this chart has is there's no participation here with the yen futures. And we know that there's a correlation between the 30-year Treasury, yen futures, gold, all of them really correlating to the yen. But it's really close call inside of the yen. But the bonds have given us, so you've got bonds giving us a signal, right, of a bottom. The XAU is giving you a clear signal of a bottom. But the yen has not, and that's why nothing has taken up. If we take a look at the XAU, I'll punch that up on my screen out here. And again, probably does not have today's data. This thing got above its oscillator and change line back on November 28th, and every test of that level has been a rejection. That's after prices moved lower, less relative energy back in the November timeframe. So everything is waiting on really one thing, and that is for the yen to get stronger out here. And without that taking place, it's going to be tough sledding ahead for bonds and for the miners out there. Now, if the market, so we've identified that there are some signals here that the market wants to retrace, even though we're in one of the stronger months of the year out here, December. Doesn't matter. You and I, we just pay attention to those patterns that are out here. Now, this is like Evel Knievel getting, testing out the track out here and getting all the way up to the top and then turning back down and saying, I don't know if I'll. That's what the markets are doing right now. Well, some of the markets. The ES Mini is testing an all-important 2208 level. It happens to be where the moon was furthest from the Earth out here. This thing has held as resistance. That doesn't mean intra-session like we're seeing right now that it doesn't get tested, but this 2208 level is significant resistance. The same level is being tested inside the Russell 2000. This is the first time that we've actually seen a test of this area, which is about 1347. That's, in essence, is where we're trading right now. This would be if the market is going to break out and continue moving higher, these levels need to be taken out. So 1347.50 inside of the Russell 2000, the TF in the ES, it is clearly breaking with conviction the 2208 area. The NQ is nowhere near the number it needs to get to. That's 48.68. And as you and I looked at, it's not showing us a whole lot of signs of help. The Dow is strong, but remember the Dow here, when I say it's strong, it made these highs back here in December 5th. And that was when December 5th was yesterday. How about that? At 3:30 in the morning. Hasn't been able to get back up to that level. Well, folks, thanks so much for being here. Sorry for that nasty sounding voice out here. I'll do my best to improve it tomorrow, which could mean not doing it all, depending on how I'm feeling. But stay tuned. Our man David White will be up next. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.